Hello everybody, Ignatius L. Jackson, CPA here. Hope everybody's doing well. Wanted to take some time today to, as promised, talk to you about some individual tax items that affect you in the CARES Act. That's the Coronavirus Aid, Relief, and Economic Security Act. So I wanted to just take some time to go over some key items in there so everybody understands what's going on. We are still waiting on a lot of guidance in this area, especially in relation to the rebate payments, and especially in relation to people who have not or are not required to file 2018 and 2019 tax returns because their income is so low. So do stay in touch and stay tuned on that. I will definitely try to update everybody once we have some more definitive guidance. But I just wanted to go through the things that we know as of now, and as more updates come, we'll definitely update you guys with important changes. So ultimately, the CARES Act includes a few different individual tax and relief provisions in relation to a number of different things. And so we'll go through each of those here. The economic impact rebate payments should start hitting people's accounts within the next 2 weeks, they're saying. Most of them will be sent through direct deposit. They're trying as much as possible not to have to send checks because it just takes longer to get into people's hands. So hopefully if they have your correct direct deposit information, you should start to receive your checks within the next couple of weeks. And when I say checks, I mean direct deposit into your account. I'm kind of using that interchangeably here. But we are still waiting on some more information, as I said. The payments will be based off your adjusted gross income and dependents that you have on your 2019 tax return, if you have filed one. That doesn't mean that you have to go file one in order to get it. That just means if you had filed one, that would be what they base it off of, okay? And we'll also go off your direct deposit information that's on that return, okay? If you have not filed a 2019 tax return, they will use information from your 2018 tax return, including the dependents that are on there. Okay, and so if for some reason there's some changes that happened between 2018 and 2019, and you think that it will result in you getting more of a payment, then you may want to try to get your 2019 return completed. But I'll tell you something later on that also you will get that credit, additional credit in 2020 if, for some reason you don't get it during this rebate time period, okay? So the way the rebates work, so whether they're doing it based off 2019 or 2018, here's how a little bit about how the calculation works. If your adjusted gross income, also known as AGI, so I'm gonna use AGI pretty much through the rest of this video. If your AGI is under $75,000, okay, for individuals and married filing separately, people, okay, you will receive $1,200 plus $500 per qualifying dependent that's on your tax return. Okay, if your AGI is under 112,500, when your status is head of household, then you will receive the full $1,200 plus $500 per qualifying dependent. If your AGI is under 150,000 for married filing jointly filing status, you will receive the full credit of $2,400 plus $500 per qualifying dependent. Excuse me. If your AGI is over either of those limits that I just discussed, you will receive a reduced payment up to an AGI of $99,000 for individuals and married filing separately filing statuses, and an AGI of $198,000 for married filing jointly statuses. Okay, so if you are over those limits, except for ex-head of household, you will not receive a payment unless you have children. So what that means is if your filing status is individual or married filing separately, and you have an AGI greater than $99,000, you will not receive the $1,200 payment, but you may receive a portion of the $500 payment per eligible dependent, okay? If your AGI is over $198,000 for married filing jointly, you will not receive the $2,400, but you may receive a portion of the $500 per qualifying dependent, okay? And if your AGIs are over those thresholds, by the way, it does continue to go down even for the dependents, is my understanding as of right now. So it could get to the point where you have a high enough AGI where you won't even get anything per dependent, okay? But as of now, if you're over the threshold, you'll get some portion of the dependent, okay? If you're head of household and your AGI is over 148,500, you will not receive the $1,200, but you may still receive up to $500 for each qualifying dependent, okay? And depending on how far your AGI exceeds 148,500 and how many qualifying dependents you have, you may not receive the $500 for each dependent either. So just kind of depends on where things stand. All right. A qualifying dependent is essentially a child that is eligible for the child tax credit on your tax return. Okay, so if you have a child that normally would be eligible for the child tax credit, then they should qualify for a qualifying dependent on this purpose. Now, I understand that there's some people who claim dependents for their children that are in college. As of right now, those children that are in college are left out of this. I think that was an unintended consequence of the law, but unless they make a change, as of right now, they're going to be left out of this equation. So hopefully they do come up with something to resolve that, because your child that's in college can't even necessarily claim their own, file a tax return for themselves to get the credit themselves. So it's really, they're losing out on both ends. Okay. If you are married with 3 kids, for an example, I'm giving you an example here. If you're married with 3 kids that qualify for the child tax credit on your 2019 tax return, this is as an example again, and your AGI was less than $150,000 for 2019 tax year, you will receive a payment of $3,900 essentially. That would be $2,400 for the adults and $500 for each qualifying child, okay? So that's an example of how much you could potentially receive. So there's definitely some calculators out there on websites. I think Forbes may have one, and some other places have a calculator that you can use to determine how much you would qualify for. And again, you would just go based off of your 2019 tax return, and that should give you an idea of how much to expect. The IRS will also be sending letters to everybody within 15 days of sending the payment to confirm how much they sent you, to make sure that it went to the right place, and that you actually received it. So if for some reason you don't receive a payment, then you should know within the letter how much you should have gotten, and it'll give you information on how to correct that issue. Okay, so keep an eye on your mail. If the IRS doesn't have your correct address, make sure you file a change of address form with the IRS as soon as possible, so that they get your correct address. And again, if they don't have the correct bank deposit information, there's a couple options you can do. If you haven't filed your 2019 return, you can go ahead and file your 2019 return and include the bank information on that return. Okay. If you're owed a refund, just include it for direct deposit. If you owe money on the return, include an amount to direct pay, and it will show up on the return as well. So those are the 2 ways that you can include the direct deposit information. There's also some programs that should be coming out. The IRS should have a website where you can put that information into. I also just found out today, I think TurboTax, Intuit TurboTax has some sort of link or interface where you can actually update that information. So I think that's pretty awesome that they came up with that, assuming that it works. I don't have verification that it actually works, but usually Intuit's pretty good about making sure what they put out actually works. So I'm hoping that will get you guys that information to the IRS, so that you can get that direct deposit. It's important to note, this is kind of a misconception out there, what exactly this rebate is. This is technically an advance rebate on your 2020 tax return. Okay, so on the 2020 tax return, when you go and do your tax return for calendar year 2020 or tax year 2020, there will be a rebate for the information that we've been discussing here. So if your actual 2020 AGI is significantly different than 2019 or 2018, depending on which year they use, you could potentially get more of a credit. Okay, so if for some reason you go through the calculation and you should have gotten more because your 2020 AGI was a lot less than 2019 or 2018, whichever year the IRS used, you will potentially get more of a credit when you file your 2020 tax return. I shouldn't say potentially. You will get more of a credit when you file your 2020 tax return. But on the flip side, if your AGI was a lot higher than it was in 2019 or 2018, they actually included a provision that you do not have to pay any of it back. So you just get the benefit of the grace of the tax law on that one, to where you don't have to pay any of that credit back if you ended up getting more than you technically should have been required to pay or been required to receive if your AGI increases. So that was a great provision that they put into there. So, but just wanted to clarify that for people, because I don't think a lot of people understand what exactly this is. It's not related to your 2019 return, even though they're using that to make the payment. It's technically related to your 2020 return, and you will have to kind of show that on your 2020 return in order to confirm whether you should get more of a credit. Okay, it's still not clear yet either if you normally don't have to file a return, if you would have to file a return in this case, if you receive the credit just because you received the credit. I'm not 100% sure on that, but I'm sure more information will come out about that at a later date, as that's way into the future at this point. If you're on Social Security, the IRS came out this week and said if you normally don't have to file a return because you're on Social Security and your income is so low, or the income you receive from Social Security is not taxable, then you do not have to file a new return in order to get the credit, okay? What they will do is, if you did file a 2018 or 2019 return, they will use either 2019 if you did one for that year, or 2018 if you didn't do one for that year. If you didn't do one for either year, what they will use is your Social Security benefits, wherever those are direct deposited to or mailed to. They will either direct deposit it or mail you a check to the same place that you get your Social Security benefits. So they did come out and say that was great benefit. That was actually in the law to begin with, so I'm not sure why they initially were saying that you did have to file a return. Somebody, I think, messed up on that one. I'm glad they fixed that and resolved that. But otherwise, if you don't normally have to file a return and you want to get the credit, you do need to file a return. Otherwise, you won't get the credit. So if you normally don't have to file a return and you're not on Social Security, you want to file a 2019 tax return at least in order to receive this credit, okay? So if they don't have a return for you for 2018 or 2019, you will not receive this credit as it stands right now, okay? So that's important to know, that if you're behind a couple years, let's say you are required to file a return and you're behind a couple years, you want to go ahead and file that at least one of those returns, so they give you a credit based on one of those returns. And obviously make sure your direct deposit information is included on that return. If at the end of the day they don't receive any direct deposit information for you, at some point they're just going to send you a check. So that should go to the latest address they have on file. Again, just make sure your address is updated with the IRS. So that's the information that we know as of now on the economic impact payments, or the rebate payments, however you want to call it. It's definitely something that should help some people, and hopefully they get those issued within the next couple weeks. They keep going back and forth on timing and dates, but as soon as we know, we'll definitely let you know. Okay, so another provision in the CARES Act that I wanted to touch on are related to retirement accounts. So let's say you have a lot of money in your 401k or IRA, and you wanted to utilize some of that, during this time period to help you out since you're unemployed. And let's say the unemployment, even the enhanced unemployment benefits, which we're going to talk about later, are just not enough for you, okay? So if that's the case, what we can do is, there's a special provision in the tax code that they put into place for the next, basically until the end of December 31st, 2020, where you can take up to $100,000 as a distribution from your 401k or IRA, okay, or other eligible retirement account. Okay, so those are just two examples, but there's some other eligible accounts you could do. And you will have 3 years to repay it to avoid having to pay income taxes on it. Okay, so if you take it from a taxable 401k account or a taxable IRA account, you have up to 3 years to repay it to avoid income taxes. Additionally, they will not charge you a penalty if you are under 59 and a half. Okay, So they're not going to charge you a penalty for early withdrawal if you're under 59 and a half, as long as you meet the criteria for making this distribution, okay? Which we're gonna go through here in a second. So that's very important and something that's really beneficial in this, the CARES Act. I know there's definitely people out there who have money in their retirement accounts, and they could definitely use this time period to take some of that. So definitely, if you have some money that you can utilize from there, I would go ahead and recommend you potentially take advantage of this. I would still say this is probably a last resort. I would not do this unless you really, really had to, because ultimately those accounts are for your retirement, right? And who knows if you will actually pay it back or not. I mean, it's hard enough for people to get money into these accounts as it is, so who knows if you will actually pay it back. But if you believe that you can, then definitely go ahead and take advantage of this, okay? So to qualify for this provision, you, your spouse, or your dependent have to have been diagnosed with coronavirus disease, or you have to experience an adverse financial consequence as a result of being quarantined, furloughed, laid off, hours reduced at work, or being unable to work due to a lack of childcare, or having to close or reduce your hours of your business related to the coronavirus disease. So they got a lot of different options in there that will cover a lot of different circumstances related to this coronavirus disease and this pandemic that we're dealing with. But you do have to meet one of those criteria. So if you're not 100% sure if you qualify for one of those, I would talk to your 401k or IRA custodian, or I would talk to your CPA or accountant to just understand if you qualify or not. But definitely confirm whether this is a possibility for you. And again, I would use this as a last resort, but if you qualify, you can definitely take advantage of this, okay? So the way this is gonna work, if you don't intend to repay the funds you take out and they are taxable, then you must include them in your taxable income ratably over a 3-year period. So let's say you take out $99,000. You would have to include at least $33,000 each year for the next 3 years, and it's starting in 2021, okay? So basically you'll have until 2023 to, in essence, repay the dollars that you took from your retirement account this year, okay? So it's a great benefit from that perspective. Usually when you take money out of your retirement account, it all gets taxed in the same year. But what they're trying to do is if someone has to take a significant amount, they're trying to make it to where it's not a significant hit to your AGI or your taxable income in any given year. And so they're giving you an opportunity to spread it out. Now that said, if you can repay it, again, it's not taxable. Any portion of it that you can repay, it's not taxable. You can elect not to include the income ratably and just pay it all in year 3 if you want. But I would definitely recommend, if you're not sure if you're going to be able to repay it, I'd probably recommend that you would do it ratably so that it doesn't affect your taxable income too much. The more you take in 1 year, the more of a tax hit you're going to take because of the way our tax system works, and it's a graduated tax system. Okay, so that's a little bit about the distributions. There's another provision, another option available. If you don't want to take a distribution, you can take a 401k loan, okay, or another eligible workplace account that allows loans, okay? You cannot take a loan from your IRA. That rule didn't change. They still won't allow you to take a loan from the IRA, so you have to do the distribution strategy for that one, okay? But if you have a 401k at work or something like that and it allows you to take a loan, hopefully your employer will update their plans to allow this, but the IRS is essentially saying that they're going to increase the limit of the loan to $100,000. And I shouldn't say the IRS, the CARES Act allows this, and the IRS is going to enforce it essentially. But you can take up to $100,000 from your 401k as a loan, and the 50% threshold that's usually there, normally you can't take more than 50% of the account balance, that is gone, okay? And this is through September 23rd of 2020. So you have until September 23rd of 2020 to take a loan up to $100,000, and there's no percentage cap on this. So if you have $100,000 in your account and you're eligible to take this loan with your employer, then you can go ahead and take the full amount of your account out as a loan, and you pay it back. I believe it's going to be over the same 5-year time period normally is, but there is a deferral for the first year. You do technically get a deferral for the first, excuse me, it's not for the full first year. It's only for payments through December 31st, 2020. So any payments that would normally be due when you take a 401k loan, those are deferred for the first, let's see, about 8 months or so, I think it's going to be. So due through December 31st of 2020, you'll get those payments deferred. I believe you need to make them up starting in 2021, but ultimately it gives you a little bit of a deferral period for making the payments, okay? So, but definitely that's another option. I would even say I would prefer that one over the distribution strategy, just because it kind of forces you to pay it back. And so your employer will likely just take it out of your paycheck. That way you just make sure you get those funds back into your 401k account for retirement purposes, which is ultimately what the purpose of that account is for. Okay. To be eligible for the increased loan amounts, just by the way, same conditions as it was to take the distribution, the special distribution. So in terms of you, your spouse, or your dependent being sick or being financially impacted, all those same provisions would apply to taking the increased loan. And the final thing I just wanted to touch on from the CARES Act would be the expanded unemployment assistance, okay? So you may have heard about this, where if you're, and you may be experiencing it right now, where beginning January 27th, 2020, and up until December 31st of 2020, there's certain enhanced unemployment assistance benefits available, and it gives you some assistance up to a max of 39 weeks, depending on your circumstances, okay? Important to note that you still apply, first and foremost, to your unemployment through the normal means with your state. So you still got to apply through your state, but what happens is, once you apply through your state, depending on how much assistance they're giving you, the Federal Unemployment Assistance Act, essentially the provisions of the CARES Act here, will kick in and increase that assistance, okay? Whether it's time frame, whether it's no waiting week, whether it's an amount, okay? So there's different factors that come in here, okay? So you are eligible for the enhanced unemployment assistance if you were working prior to the coronavirus and are otherwise available to work, but are currently unemployed with no ability to telework and are not eligible for paid sick leave or family leave benefits. So key thing in there was telework, okay? If you're able to work from home, you have to work from home, essentially. You can't just not work from home. So from that example, just kind of keep that in mind. All right, so conditions where you can qualify for this: you or a member of your family are diagnosed with the coronavirus. That works. You'll get unemployment assistance. If you are, laid off, furloughed, or whatever, for whatever reason, and you're unemployed right now and you can't go and find another job somewhere else or something like that, okay? You have to stay at home with your child due to their school or child care facility being closed. You are unable to reach a place of employment due to a quarantine. So let's say your employer is still open, but they want you to work on site and you can't telework and you can't get there because of a quarantine that's in place. Well, in that situation, you're covered under the unemployment assistance, okay? You have been advised to self-quarantine by a healthcare provider. That would also get you covered. You had a new job you planned to start, but the job was canceled due to the coronavirus, or are otherwise unable to reach the job due to the coronavirus. That also qualifies. You were not working previously, but now will have to work due to the death of the breadwinner in your household. Excuse me. And you haven't found a job yet, then you would qualify for unemployment benefits. So if you were not working, let's say you were stay-at-home mom or dad, okay, and your spouse passes away related to the coronavirus, okay? And now you're basically the breadwinner in the family, then you would qualify for unemployment assistance because you're now the breadwinner and you didn't have a job to begin with. Okay. If you had to quit your job as a result of the coronavirus, that would also qualify, and your place of employment is closed as a direct result of the coronavirus. So those are all factors that will qualify you for this enhanced unemployment assistance. If you are self-employed, important to note, you can also qualify for the enhanced unemployment assistance, even if you're not usually allowed to in your state, okay? The enhanced unemployment benefits also provide for an additional $600 per week of benefits on top of what you would be eligible for through your state normal program, but only through July 31st of 2020. So that provision is not through December 31st, it's only through July 31st. Additionally, there is no waiting week. If your state normally has one, there is no waiting week. The federal government will basically pay for that first week, which I believe should include both your state normal benefits plus the additional $600. Okay. The state also cannot have a requirement to actively seek work during this time period while the area is being impacted by the coronavirus, such as a stay-at-home order and closures of businesses and persons in kind of your field of expertise. So they can't, make you go seeking work when you have a stay-at-home order issued by your governor for the state. So that's another benefit to you. And these new provisions, unfortunately, are taking the state some time to implement. So be patient with them. A lot of systems, their systems are not handled to handle this kind of influx of unemployment claims as well as these changes from the federal government. So definitely be patient with them. They may give you their typical benefits initially and then catch you up with whatever you were due under the new federal unemployment assistance provisions. So just kind of keep that in mind. You may get a small benefit initially and hopefully it'll get increased to the correct amount at some point in the coming weeks. So there are definitely some other changes in the CARES Act that I don't feel are quite as important or quite as impactful. So I'm not going to cover those in this video, but definitely there's articles and stuff out there on some of those other changes. Just as an FYI, some of them relate to required minimum distribution rules and above the line deductions for charitable contributions and certain changes to qualified medical expenses for HSA and FSA funds. So there's definitely some cool changes there. So go ahead and read up on those if you are interested in any of those. Just as a final quick reminder on a few things, okay? Tax payment and tax filing deadline are extended to July 15th of 2020 for all tax returns that were due, tax returns and tax payments, that were due by April 15th, 2020. So those are still extended until July 15th. There's no interest or penalties, and this regardless of the amount that was due, okay? The IRS has came out and clarified that if you already filed your 2019 return and scheduled a payment to be directly debited from your bank account on April 15th, that will still occur unless you call to cancel it. Very important. So some people, when they do their return, if they owe money, they'll schedule a payment to come out on April 15th, which is the due date. Well, they're still going to take that money out unless you call them to cancel it. So definitely reach out and cancel that. There's an article on IRS's website on what number to call and how to do that. So definitely go read that. While the IRS is also stopping many collection efforts, I spoke about this earlier in another video I did, they did clarify that if you have an installment agreement where it is directly debited from your bank account, those will continue to occur unless you call your bank and ask them to stop the withdrawals. So the IRS is not going to stop the withdrawals. You have to call your bank to stop the withdrawals. I don't understand this. I don't understand why they can't just stop the withdrawals during this time period. I'm hoping they change this. I just don't get it at all. You will have to call your bank though as of now to get them to stop the withdrawals. They said that the banks are required to do this. So if for some of your banks giving you a hard time, maybe ask to talk to a manager or something like that. But if you're having trouble making the payments, obviously we don't want you to get overdraft fees and late fees on in your bank account and stuff like that. So make sure you talk to your bank and have them stop any automatic debits from the IRS. Okay. And important to note that you will have to ask your bank to take away that provision before July 15th so that it starts to take them back out. So you got to know kind of what those dates are, and work with your bank to make sure that they release that restriction once July 15th rolls around, assuming you're able to make the payments, obviously. If you're not able to make the payments starting July 15th, they will probably cancel your installment agreement and you'll have to apply for a new one. Okay, so as a reminder, you can still also make July HSA and IRA contributions through July 15th. Definitely recommend you take advantage of those if you haven't already, and you can. I know a lot of people don't have any extra cash right now, but if you have the ability to do that by July 15th, definitely take advantage of that. And then I previously spoke about the Families First Coronavirus Response Act as well, which gives individuals mandatory sick leave and family leave when you work for an employer with less than 500 employees. That went into effect starting April 1st of 2020. So that was Wednesday of last week. So if you were being impacted and you qualify for that, definitely talk to your employer about making sure that they're paying you for what you're owed under those provisions, okay? And there's a lot of articles on that on the Department of Labor's website and also the IRS's website related to the coronavirus. So those are the updates for the individuals as of now. Hopefully this was informational for you. If you have any questions about anything that was discussed here, feel free to reach out to us. You can reach us at 480-542-0404. Our website is iljcpa.com. We also have some information on there as well. And so definitely, if you have any questions, reach out to us. Otherwise, hope everybody has a good night, and we will talk to you later. Thanks. Bye.